Hi everyone, Michael from Bullion Now, bullionnow.com.au. So the inflation figures were released this morning. They came in at a healthy 5.6. But what does that actually mean for us, both as participants in the economy, but also as stackers? So you'll see that everyone's getting excited, the media's getting excited because they're expecting inflation figures to come in at 6.1. And as I said before, they came in at 5.6. So it's showing that slowing down of the inflation. Now, it only shows a slowing down of inflation, and I think this is a point that a lot of the media is missing here. By saying it's coming down, it's not going to stop inflation. Inflation is still going to increase over time, but also it's not going to go, like the prices are not going to return to where they were. And I think we miss that in a lot of the detail where people say, oh, I'm glad inflation's coming down a bit. Yeah, it's good because the prices that we're paying isn't accelerating or isn't increasing as rapidly, but they're not going to ease back. So that the rent that we're all complaining about and the power prices and all those types of things, it's not like they're going to come back to where they were once inflation's under control. They are at this price here to stay and only going to increase from here on in. It's just the rate at what they're increasing is what they're talking about. And I think that rate example is missing. So to give you a clear example, I'm obviously standing up here in the snow, and you can see I'm only ankle deep, and it's only very lightly snowing. So it's not going to increase too much, but it is going to keep increasing. However, if it increases, the snowstorm increases a heck of a lot more, and we start getting a lot more snow, very soon we're going to see the snow come up higher and higher and higher and higher on me. And that's the same as the inflation figures that we're talking. It keeps coming up higher and higher on you. Those inflation figures keep increasing, and that percentage that we're talking about is just how rapidly that snow is climbing up my body. I hope that makes sense. So the couple of things that we need to take away from this morning's numbers. One is that it is falling, so the rate of increase is falling, which is really, really good. But if you take out the really volatile variables, which are fuel and holiday prices, believe it or not, it actually doesn't look as good as what they're saying. So if you take out fuel and the holiday price, it drops from a 6.5 inflation figure increase to a 6.4 figure. And that's the one that's probably, it's good that it's come down a bit, but that's probably the one that we need to watch a bit more closely, because it's still showing that other than fuel and going on holiday, everything else is still going up at a far higher rate than everyone wants. So what does that mean for you and I as participants in the economy? Well, it still means that prices are still increasing at a fairly brisk rate. So we're still seeing on average prices going up, except for fuel at the moment. We're still seeing those prices going up by that 6 and 7% year over year. And I know that's an average number. You'll see, milk might be going up far faster than your rent is, or more likely vice versa. But we're still seeing that increase. They haven't got it under control yet. The other thing we're seeing is because of that lower number, that 5.6 number I mentioned right back at the start, it's seen generally that interest rates may not be increased at the next Reserve Bank meeting, which, as you'll see, if you look at the price of gold in US dollars, it's fairly stable. It's only moved a couple of dollars either way today. But in Australian dollars, because they don't think the interest rate is going to increase as much, the Australian dollar has now weakened, and so it's driven the price of gold up in Australian dollars again. So we're up another $20, I think it was when I looked at it before. So there's a couple of immediate impacts there. The third one is, and one probably that I want to emphasise, is that if you relax into complacency, if you're not putting yourself into a good position financially, whether that be stacking or something else, I'm talking generally here with hard assets, you're going to find that even if the inflation rate drops back to 4% or 3% or any of those sorts of things, it's still going to be increasing. Your dollar, your hard-earned dollar, that piece of paper or piece of plastic these days in Australia, all those digital symbols in your bank account, you're still going to find that their purchasing power is going to keep decreasing more and more as time goes on. That's the overall impact of inflation. It's good to see that overall number is coming back, but just be aware of the little things that are hidden inside that. All right, that's it for now. We'll talk again soon. See ya.